I always thought like they don't want to talk to brokers. People hate brokers. I was a broker. I know, like they hate brokers, and it's like the reality is they don't hate brokers. They just hate shitty brokers. Like they like good brokers. Like you like a good broker.
You're listening to the Sandhill Markets podcast. I'm your host and Sandhill Markets CEO, Adam Hardy. Here at Sandhill, we focus on providing education, community, and access to venture. With this podcast, you'll get a seat at the table for discussions with other founders, investors, and innovators. I'm excited to learn a lot from these discussions, and I hope you are too.
Like, what are you on tour for currently? Like new products that I can kind of show off, and because we'll do combo, we can like show off notice, and then we can talk shop a bit.
Sure. I mean, whatever's best. I think like the main thing is just that we had this down market plan for a while that we were working with to see what it would look like, and it just wasn't worth it, and it was kind of counter to what we were trying to do anyway, which is we want to educate everyone, and like there shouldn't be a bar you have to clear. You should be able to just access it. And so 2 weeks ago we pushed out real-time pricing, real-time market caps, full access to the charts, chart comparables to indexes, other thousands of other companies, chart indicators, shareable charts, valuation history, financing, not all the financing information, but most of the financing information. And then obviously this like really streamlined way to contact brokers and see who the people are that you should be talking to if you're trying to get liquidity.
And that's all free now.
Free.
That's all like anyone.
No, you don't have to log in, dude. It's publicly available. Wow. You go to the public website and you just search SpaceX and everything I just told you is there.
Damn.
You don't have to create an account. So
Shit.
Yeah. It's good. It's good. It's helpful. I think.
Yeah. I bet your competitors are pissed.
I don't know. Probably. I don't know.
Probably.
They should have done it already. They should have.
Do you feel like you guys are? Do you feel like you're like skipping ahead in the like? I feel like maybe the argument would have been in a an environment where a bunch of people are kind of selling the same data, that eventually the price competition would like kind of chip away at everyone, that you're just kind of skipping to like kind of seeing that happening and then going for like what you think is the bigger opportunity, or like what was the like what led to that decision?
Yeah, I mean, I think we were really conflicted when we first rolled out our public product experience. We were conflicted about how to structure things correctly, and I wanted to give everything away. My team was like, "Dude, don't do that, please." And so we kind of had this battle, and we decided to create some plans. This kind of like down market plan, and we basically, back then it was kind of like, okay, we got to get people to sign up. And once they sign up, maybe they'll, realize they need some of this data they can't see, and they'll buy a plan. And that worked. We had people buying all the plans, but we had to like delay pricing and stuff. Oh, here's the price from 90 days ago. That sucks. And there was a way to get one company for free. If you work at SpaceX, you could pick any company, and you get free access to, but it's just one company. And it was just this whole thing. And it was really, because we were viewing things around the idea of selling access to all this data. But I think there's like two levels of data. I think there's level one data, which is like current pricing, current market cap, some basic charting and history and stuff like that. And that's something that everyone should just know. Like you shouldn't have to pay to go see Google's stock price history. Like that's obnoxious. Like that should be freely available. So we killed our down market plan, refunded those guys, and decide to make all that information free and make it freely available, not just for people that log in, but also if you just go hit notice.co and do a search for a company, it's all there. Wow. And it's a little bit uncomfortable because, there's like web scrapers and all this stuff, and it's just all these things that are going on, but like, whatever, like we want to educate the market. And I think that, understanding where the market is, understanding where the liquidity is or where the demand might be, that's a key input to transacting. And if you can lower the cost to transact, theoretically more transactions should happen. People should have less barriers. They should be able to get the liquidity they need. So
wow,
that was always our mission. We always wanted to be educating the market, the whole market. That's why we built Notice the way that it was. You don't have to get approval to sign up. You don't have to pay us $20,000 a year, like none of that stuff. And so this is just like kind of the final fulfillment of what we've been trying to do from the beginning. And so it's pretty fun.
That's a big move. I'm like super excited to like put this. Yeah, I don't know. I guess like I'm a nerd in this. Like I forget that like maybe not everyone like on Twitter is going to be like, holy shit, there's free data the way that I am. But for anyone who I mean, I know 4 different people that I'm going to text as soon as we get off the call to be like, notice is free now. You can just go check that out. Because I think that it's been such a pain for so long. And I think that I'm not necessarily like the hair on fire. Like I'm, obviously like someone who cares about it and like whatever transacts. And therefore like I could go through the hoops of figuring it out. But on the employee side, I think it's really interesting. Sure. Have you gotten shit from companies?
Not yet, actually.
Well, it's pretty fresh. Remind me when this happened again. Remind me like when this got pushed live.
A couple weeks ago. I think it was like 2 weeks ago. And so, I mean, I was expecting to get a lot of static from companies from the beginning. And in the beginning, we had very few users, 5,000 users a month or something like that. And now we have like over 100,000 people that use Notice every month. And it seems like a sufficient number of people to be using the platform. And I'm sure some companies have heard of it. We actually have some companies. So we still have this pro plan that's for like, very serious active investors that has, crazy analysis and like waterfall exit scenarios and stuff like that. Yeah. So we still have that plan. And actually some companies have purchased that plan. Like they want to know what's going on. So we actually have more companies as customers than we do companies that are angry with us.
That's okay.
It's kind of unexpected, to be honest with you. Yeah. And I think it just speaks to the point that like everyone needs to know what's going on out there. It's just really hard. And I think that when you think about data, like you said, if you're really in it, maybe it's cool. And other people are like, who cares? But the reality is like, I think this data needs to be verified, first of all, and it needs to be multi-source. Like you need to be pulling from a bunch of different contributors from around the world. I think if it's a single source, if I'm simultaneously telling you what the price of something is and also trying to convince you to buy something from me, it just, there's some potential conflicts there. You just gotta be a little careful. Yeah. So, we're distinctly not a marketplace. We never will be. That's not in our DNA. There's a lot of marketplaces that are out there that are great, but for us, we really just focus on trying to be this kind of neutral Switzerland that can ingest all this data, and as a result, we end up processing a lot more trade data than even the biggest marketplaces.
Yeah, because the marketplaces, and there are a few. I guess maybe I'll bleep out the names, or we'll keep it brandless. But marketplaces that also sell data, and sure. That's this combo in there. So because if you're a broker, and maybe remind me of like how you are getting that data, like because it's voluntarily reported, or give me a sense of how you're actually getting the data. Because on the marketplace, I see what you're saying, where it's like hey, it's worth this much, and also buy it from like it's a little bit.
Yeah, I like what you got there. I'll buy it from you for $1. You're like, I don't know.
Is it worth $1? It's like, the data says it's worth $1.
Yeah, exactly. See, look right here. It's we're just joking around, but that I think that even though that probably doesn't exist, I think it's in the back of people's minds. They're like, And I think the main thing is too, like just this idea of having competitive groups. So instead of it being a large platform where there may be 50 brokers, but they're all coordinated. Hey, we're selling SpaceX for $100 right now, guys. Right? Like that's It's not
all the brokers are sitting in the same room. It's different than a bunch of different independent players, like kind of.
And so a lot of our data contributions come from independent brokers, and we work with the best. We have 90 brokers on the platform, and there's kind of varying levels of engagement there. But we have this premier broker group, which is the 15 best brokers on the planet, as far as we can tell, and they contribute their trade data to us, which we verify and ingest, and then we use that data to rank them. And so we say, hey, if you want to buy SpaceX, here are the best SpaceX brokers. If you want to buy Stripe, here's the best Stripe brokers. If you want to buy OpenAI, here are the best OpenAI brokers. And that it's interesting because I always kind of thought, people are going to care the most about pricing data. They're going to want to know what the price is and whether companies are trading. And that's certainly what people want to know. I always thought like they don't want to talk to brokers. People hate brokers. I was a broker. I know, like they hate brokers, and it's like the reality is they don't hate brokers. They just hate shitty brokers. Like they like good brokers. Like you like a good broker.
Like a big, like a huge thing. Like they help a lot.
And so when people come to the site and they this price seems good and whatever, I want to learn more. They talk to brokers. Of course, that's free. You don't have to pay us to talk to brokers. That'd be weird. And so you just reach out to the top brokers, and those brokers are probably going to know more about trading that name than anyone else on the planet. And so it can save a lot of time languishing in conversations with people who are pretending, to be able to do things they can't do.
Yeah. Which is the biggest, like, and I think anyone who will end up listening to this who's maybe had a, kind of early experience, right? I think that, the deeper it doesn't take that long if you live in the space to realize like how full of shit most people are, right? It's actually like, if once you get a few reps in, you like learn that pretty quick. But the reality of a lot of the sellers in the market, and I think this is where it's at its ugliest, or one-time sellers or one-time buyers, right, who aren't super institutional, you come into kind of the top of the funnel for the industry. Like you're not that many layers down, and you just kind of assume that when someone says they have a buyer, that means they have a buyer, right? Like, which you would think, right? But in fact, when someone says they have a buyer, really, depending on who you're working with, the chances of that meaning that they have actually someone who's looking to buy the thing that you're selling today, like the probability of that's actually pretty low. Whereas, and that's why, working with the best brokers and actually having people that are, we transact in this name on a regular basis, and it doesn't benefit me to lie to you about it.
Right.
Like, that was our experience. Like, cause we went through the ringer on this, and you've been, right beside us as we figured a lot of this stuff out. The benefit of a good broker, like you can just get more done. Like if you were looking to get like, and that's really what brokers are at their best and that's what they get paid to do, right? Is to help you, transact as you are looking to or whatever. And it's a huge difference. There's a huge difference.
I mean, like a great broker makes all the difference. Like that's kind of what the way we position this is. A great broker makes all the difference in this space. It's not a commodity. Everybody's got access to this hot new thing. If you want the hot new thing, there's maybe a few people that have access to it, or a few people that have the information that you need, the documents or the financials or whatever those things might be, because they've been in the space for a long time and they have a lot of relationships with issuers, with institutional buyers, smaller buyers, families, and they're not going to throw away that reputation to string you along, nor do they have time to do that. Like a hallmark of a good broker is you talk to them, you say, hey, I want to do this. And they go, hey, I'm really sorry, man. I can't help you with that. Like,
I don't do that.
A shitty broker will say like, oh yeah, no, I got that. I got that. And you're like,
really? I can figure it out. Yeah. Cause they got nothing else going on.
They got nothing else going on. And so I think that's the cool thing is like, and I think that, if you think about what we're doing with Notice, like it ends up being a tech platform that kind of helps to empower these independent brokers that are very, very good and do tons of volume, not in every company, but in like, they each kind of have the
names they cover,
they cover. And now we're helping to provide broader exposure to the dream team of, secondary market brokers. And I think that, I think that people that do talk to them through Notice or otherwise recognize that there's a distinct difference between the level of quality that you're going to get working with these guys versus
and so so we talked about it a little bit before, but like and maybe a segue into business model changes like within Notice and like so because the classic, right, I think, and everyone's gotten wise to this over the course of the last decade of like, when it's free, it's someone's got to make some money somewhere. So if you're not charging for the data, right, you said there's the premium one where the bigger institutional players, maybe they'll still buy that off of you, but the model has fundamentally shifted in terms of where when you think about the next 5 years of Notice, it's not selling more like, top line price data. It's referring into those super brokers or Tell me a little bit.
I think this is if we keep going on this path and it continues to work, we've been kind of running this experiment for 30 days. It seems like it's working. I think we've got 6 or 8 deals done, or, close to signed and like waiting for company approval, whatever. So it is working. And I think that it will continue to grow. I think we go down that path. We'll get a referral only broker dealer, and we'll take a fee share directly to Notice for folks that we're referring. But ultimately, I think that the key here is like what I believe that this market needs access to this information, and they need access to the tools to try and sanity check and understand what's going on. But then I think the people that do need to transact, they need to have access to these brokers that can help them with that are really, really good. And they need to know who to talk to. And what they don't need is another marketplace from us. Like I could never hire brokers good enough to compete with the brokers that are already partnered with us on our site. Like there's just no chance. That's why those people are independent. They don't work at the other places because they can never afford them. They're just too good. And so like you can't have 15 Michael Jordans on your team. You blow the salary cap. So like that's kind of the situation, right? So So I think for us, what's really nice is we continue down the path we've been on, which is really focusing hard on aggregating this data, processing it, creating the tools that make sense. And I mentioned we get the data from some brokers, but we're also getting it from our users. We have whatever 100,000 plus people using Notice every month, and some of them give us trade data. They say, "Hey, I bought this into this SPV, or I did this direct trade," and we review their trade documents and we verify it, and then we collect data from there. So it kind of helps widen the base of contributors. And so, anyways, that's kind of what we're focused on, is like this data, trying to make sense of it, and doing it in like a third party dispassionate way, where if a company's price algorithmically drops a lot, I'm not simultaneously trying to sell that company. Now I'm conflicted. It is what it is. Like, this is what we think it is. And anyway, so it's nice to keep it clean.
So one question on the data source part of it: when people submit their trade data, what is the benefit to them there? Because I think in the past, right, like it would maybe you give to get kind of a thing, right? But now that it's free for everyone, does that change the intake of that sort
There's
of? There's
level two. This level 2 data. So level 1, like kind of level 1 data is available to everyone. Level 2 data is like the raw trade data, the raw bids and offers, the raw mutual fund marks, the exit value analysis, and like kind of all this like really heavy duty professional investor kind of stuff. You can unlock access to that. But also a lot of it is because we talk to people, we're like, why are you giving us trades? We're happy that you're giving us trades, but like, why are you doing it? And strangely, like a good chunk of them are like, well, we want the pricing for this company to reflect the transactions that we've done. Like, we've done these transactions and we want them to be reflected here, right? So we don't want there to be a disconnect. And so there's some like kind of, it's not altruistic. It's more like, I don't know what you would call that. Yeah, it's like they want it to be more synchronized. I don't know.
Yeah. Well, because it leaves you, if you're in either direction, whether you're doing, or I guess it could go, if you got to trade in, something's priced at $100 per share on Notice, and you got to trade in at 95. Maybe it looks, I know, but if you're on this buy side of that, ultimately everyone wants it to just be the price, right? Like, they want to have a source of truth. So I see what you're saying, where everyone is contributing to, like, we just want this to be right. Because we made a trade, we know that's real, and we want the price that's publicly available now, and which maybe even that feeds into that even more. Like, if Notice is able to continue to ride that momentum to be the, whatever, Yahoo Finance, like, what is Microsoft worth today? Like, that's where you go to like check it out. Then it's in everyone's best interest that it's just right. Or
I mean, there's certain cases at the margin where you're like, you'd wish, you maybe withhold this, you don't want the market to know about it, whatever. But like, at the end of the day, if we say it's $100 and you're buying at 95, you kind of want to submit that because you don't want sellers to tell you that they want 100. So like, the price 95. Like,
like, you need to reweight here because this is not.
So I think there's definitely gonna be cases where like some groups will never give us trades and they'll never participate. But there's a fair number that do, and the brokers certainly do.
Because the brokers don't. They just care about deals getting done. So the price being right and being a reference point. Because I've had this discussion so many times. We had this discussion when we were talking to sellers, and we would refer to Notice data. We refer to like, this is what we think the price is, and it's so helpful when you're talking. When you're really trying to connect a buyer and a seller, to be like, this is just what the price is. Like, I'm not like trying, and that is not so long ago, that was like not an easy conversation. It'd be like, well, the buyer would be like, this is the price. And the seller would be like, I thought I got told that this was the price. And they're like, 20% apart or something crazy.
Yeah, sure.
Like, and the broker's sitting in the middle being like, let's all be reasonable here, right? Like, it's actually, the price is actually like right in the middle of this or whatever in the easier cases. Whereas if Notice, and again, we've had this direct experience where we were working with a smaller seller of, a big, unicorn name that you've heard of. And when we were running our auction model and we were setting reserve prices, right? When we were like, hey, we're going to put this live, but you need to, set a reserve price where you're comfortable with transacting above this price. And that would have been, if without Notice data, a number that we, or without data provider, just in general, you just pull that number out of thin air where it's like, I think the market's here. And then that puts the seller in this really weird situation where they're like, you seem compromised in terms of what you want this reserve price to be. You just want to get something done, right? So it's probably better for you, the reserve price to be lower.
Sure.
Whereas what we used to do, and where we just go, this is, check, these are the data, this is the data, this is what we're basing this decision off of. We think you should put your reserve price about 10% below this, with like kind of a liquidity, like let's get this done discount. And that's what the market is, where it's like, I don't want to talk about what the market is. I want to talk, if you're a broker, and this is, I'm sure on the broker side, you don't want to talk about where market is. You want to talk about whether or not you want to buy or sell the business, like at the company. And this is just not my opinion. This is just what the price is generally in the market, plus or minus a couple of percentage points.
Sure.
But I guess that's an interesting segue to not every name is traded.
Sure.
Like the variance can get pretty wide. And that's where, though, you end up relying on broker, right? Where it's like you provide kind of this top line number, like this is our estimate based off of like all the data that we could possibly get our hands on, and that's what we're in the business of doing. And then when you talk to a good broker, they'll talk to you about like the range where it moves, maybe in between there. Correct?
Yeah, certainly. I mean, there's definitely a lot of sellers out there that want to sell stock in what could be great companies, but maybe the buyers just aren't aware of it, or they're not demanding it. And so there's a lot of folks that go unfilled. And so, we do our best to try and help people understand, hey, there's not a lot going on here right now in this name, or there is. And even if there isn't, you can still talk to brokers, but they're probably going to tell you the same thing. Right. Yeah. And so I think that these things are bought, not sold, right? Absolutely, the buyer has to want these things. And it's such a variety of factors that influence, the age of the company, have enough holders vested long enough to have shares to sell. Is it a company that's got positive news cycles that's going to draw investor attention? Is it in just like a hot sector where like everyone just wants broad exposure to the sector, and you might be the 35th best large language model out there, but you're going to get investors that want to buy it because who knows, rising tide lifts all boats. And then there's just like a whole host of factors that can kind of influence. And then there's like, the roaming liquidity, right? Everyone wants it today, next month, crickets. And so,
crazy.
I think the main thing is, we talk about knowing the market, knowing the price, which is important, but also just knowing like when buyers show up, because you want to make sure if you are looking to sell, you want to make sure you're first in line, because I think oftentimes when liquidity will hit a company the first time, especially when I was a broker, I would see this, like the employees are like, finally, yes, great. And then they would just have these very high expectations of what they should be getting. And sometimes they worked at companies like SpaceX and, hey, good job. And sometimes there were companies that liquidity would be filled, and then next month there was nothing, and then they'd have to wait for years or maybe never be able to get liquidity again. So I think just knowing that there are buyers, knowing that things are happening, can sometimes be
being able to kind of pulse check it generally, like the idea of being able to. I've always thought that was so crazy. And there's a couple, people that different people that work in the space, and like some of the big like aha moments that I've had with these conversations over the course of the last few years have been, and because I whenever got into startups, being like, I'm going to build a unicorn, like I'm going to be that guy, like that's the path I want to take, and then whatever, I'd built the company and, joined stocks or whatever. And then I had the chance to get on the phone with some of the guys that had made it, people that were, literally the person I'm thinking of really directly, tier one, series C led, or like a series C led by a tier one, like they hit the like unicorn status. He'd been doing it for 6 years, co-founder. And he's on the phone with me like, so I have, maybe $100 million of this business. I like live in a shithole and like want to be rich now. So like, what do I do to do that? And I was like, what? Like, are you kidding? Like, I thought that would go like, and anyways, the reason I bring that up is because that person who's a very smart, like obviously very entrepreneurial, like built their business from nothing to being worth over $1 billion, had no visibility on what liquidity looked like, he knows what the round's priced at, but he doesn't know, like, can I get out there? Or like, who do I ask about that? Like, I've had conversations with people like, my first advice ends up being like, well, you should probably ask internally. You have to ask internally first. Like the cleanest way for this to happen is for this to get done with people that are already on the cap table. Right. And the reaction is literally like, oh, okay. Like, because it's like, but when would you learn that? Right. Because it's not, if you're not someone who like, me and you've had this experience, right? And you were on the broker side, but like I was, gonna be a banker person like that. So I came from that a little bit and then like have lived in this world for a while where it's like, oh, everyone knows what an SPV is. There's plenty of like, again, like tier one founders that why would you be maybe round dynamics, like how to get your company funded, but you're not in the like liquidity business. Why would you understand that or understand like the dynamics of this kind of niche financial market that doesn't have anything really to do with like necessarily your company getting funded, right? It's kind of it's adjacent, but it's like not the same game.
Sure.
And so whatever tools like Notice make that more readily. You can literally look. You can look like, is this happening? Like, are there people looking for this? Are there people trying to buy this? Are there brokers that work with well, obviously maybe not at the founder level, and even at $1 billion, it's pretty light. But it seems like it's starting to push downstream, and you can see the market like maturing.
Yeah, I mean, last quarter we saw trade volumes up like 50% over the prior quarter. So last time we've seen this much trade volume was like Q1 of 2022 when it was kind of coming down from the Q4 2021 peak. So like it's definitely getting stronger. The market seems to be picking up. Pretty concentrated in like AI type names, as you might imagine. But there is definitely stuff getting done in names that haven't been active for a long time. So,
what's your take on the like IPO window, kind of companies staying private longer? Like when you think about, obviously you're building Notice, I guess I could kind of guess what you would think, right? But do you think that companies will just continue to stay private longer? Do you think that like the IPO window conversation is something that, maybe we'll look back on and be like, oh, remember when companies used to stay private for 12 years? That was crazy. Or do you like, what do you think, where do you think it's going?
I mean, my guess would be that it would continue to be as it has been for varieties of reasons, right? Accessibility of capital, difficult, challenges and difficulty of dealing with volatility, getting stuff trading. I don't see anything that would lead me to believe otherwise, especially, I mean, maybe some of the top buzziest companies go out maybe earlier than they normally would, like an OpenAI or something goes out or whatever. But I don't think that there's just a lot of incentives. Even the venture funds are a bit incentivized to keep these private longer now, right? Because they have these big follow-on funds and stuff like that. And so I don't really see, and in the founders, they're getting liquidity, most of them, at least in the biggest companies. So they're like, okay.
They're getting IPO type cash.
Sort of, yeah. They're getting 7 figures. So it's like, I've got cash. These guys keep investing in me. All right. And I don't think it will, not that I can see, I don't think it would change substantially.
No, and I obviously agree. Like we're preaching to each other's choirs, kind of. Because we both have made decisions to like work and live in this space, right? So if we thought it was going to go away in 2 years, probably wouldn't be doing this.
Yeah,
but
sure.
But I one of the things that I'm really interested, and again back to the employee side of things, because again, there's a very different like the layers of information and who knows what, founders and lead VCs probably have a pretty decent sense of like what this all looks like, right? Like, what the, whatever. I told a horror story of a founder who like really didn't have any visibility on it, who was like early in the cycle of this, but founders of, companies that have been unicorns for, multiple years or, decacorns or whatever. And the lead VCs that they have, been on that journey with all kind of know that game of the liquidity. Like there's been money taken off the table at some point. They've probably dealt with not only liquidity for themselves, but liquidity for like, the exec team, things like that. I'm super interested in that employee layer, like the people who aren't in the fundraising room, like the people who aren't at the table with the, the Series C lead, right? Because there's liquidity. You can have a liquidity conversation there.
Sure.
But 97% of the company is not in that room. And if they've been there for 6 years, liquidity is a real thing. So one of the biggest things I'm interested in all this, and I'm sure Notice, is I think in a really cool place to be a part of it, is what new best practices around employee liquidity look like? And I think that we've seen this play out. Like, I think that Elon continues to like kind of set a playbook there a little bit where there's tenders twice a year. Like, why would there not? Like, I think tenders twice a year is super effective. Like, if you need liquidity, you know, if you need like substantial liquidity as an employee, you've been there for a long time. But companies like Notice, right, you know, allow for, I don't know, I feel like if prices are out there more regularly and everyone's able to kind of see what's happening, then you can't hide behind, oh, well, you know, maybe when there's a round or something like that. Like, if you're an employee, you can see, like, I can see that there's stuff happening here, or like someone's getting liquid, or like these gray markets that existed in like pre-IPO Airbnb and like forwards and all this shit, right? Like, feels like that sort of stuff goes away with a combination of good data and like, you know, some kind of repeatable playbooks around, okay, and we're going to be private.
Yeah, that's a good point. I mean, I think tenders are great, but they typically, I mean, it's easy for Elon to be like, we do tenders twice a year now because he says he doesn't need more cash for the business, which is huge. And it's SpaceX. You know, so typically, you know, tenders are like excess investor demand, right? Hey, we're raising $1 billion, but we have $1.5 billion in investor demand, and we've been around for a long time. Let's give some of our early investors and our employees some liquidity, and maybe even we'll have those folks sell at a lower price per share so that this investors that are coming in for 1.5 billion, they can get a blended price that they like. So maybe I get a little bit higher valuation because I'm going to follow on with like 500 million at this lower price because it's common or whatever, or earlier preferred. And so you get to a blended price. And so maybe there's some of that going on, maybe there isn't, but the reality is like, you're not going to allow your employees to take money off the table if the company doesn't have enough money to operate. And so you've got to have investor demand that's above and beyond your own capital needs. And that list of companies is pretty short. And so I think it's hard to just say, I'm going to always have a tender every 6 months, because what's the worst thing? The worst thing is you go to do a tender and no one knocks on the door and says, I want to buy your stock from your people. And then it's like your employees freak out. It's a huge catastrophe and everyone runs away and says, no one wants this company anymore. So that's pretty bad. I think one of the things that we're pretty interested in, and I mentioned earlier that we really want to educate everyone, which would include employees who could never buy data and, you know, all these things they never would, is helping employees to understand not just like, is there liquidity, but should I exercise my options? Like, I've been at this company for 3 years, I'm leaving, I saved some money. Should I spend that money to exercise my options and pay my estimated taxes or not? And that has a lot to do with the capital structure of the business. And capital structure is like kind of complicated. And I mean, people in tech are smart and whatever, but no one wants to fill their brain with that crap. We did. We didn't want to, but we did. And so we kind of compute some metrics that are meant to kind of give like a risk score to common shareholders. We call it the coverage ratio. And there's a few other metrics that we have as well. So it's like if the company has a coverage ratio of less than 1, your common might be worthless. So even if they got bought today for what, like, the company's value 500 million today and they get bought today, your investors get their money back, you get nothing. And coming off of 2021, when there are these big highs, huge deals done, and then coming down, and these down rounds, they're a down round, which is harsh because the valuation is lower and these types of things. But oftentimes they carry additional investor protections and investor terms, like multiple times liquidation preference or participating preferred or ratchets or things like this. And so being able to understand those anti-dilution provisions and things like this and how that would impact the value of your common, it's just not something that people want to spend their weekends doing. And so we've done that now for 400 companies. We have waterfall kind of exit value understanding for 400 companies, and the rest of them we kind of have approximations. But I just think like really equipping yourself and understanding like this is in some cases your biggest investment, right? Like you're a young person, maybe
in a lot of cases. I feel like in a lot of cases in tech.
Totally. And so, you know, and what's really brutal, and maybe this is a topic for another time, but like what's really brutal is some of these companies that are doing what they can to survive. They're desperate, raise like, you know, a Series X, which is kind of like the market death. And it comes in like debt, and it's got these crazy provisions and dividends that are cumulative that have to be paid every year. And it's like all this stuff. And like the employees have no idea. Like a guy I knew, his son was the number 4 employee at a company. And They did a Series X. He had no idea what that meant. And Basic Common was way underwater, like way. They have the company had to grow 10x for him to be made whole. And then they finally ended up declaring bankruptcy. But he was leaving and he had saved like 50 grand. And he was like, I'm going to use this to exercise my options. And I was like,
don't do that.
I don't recommend that. And so he didn't. And he was like, oh my gosh. But like, so what's crazy is like the company knows that they're dying, right? And yet some employees leaving and they're like, here's 50,000 for my options. And you know they're worthless and you just take it because you can't say anything because it creates a panic if you say something. So it's just so brutal. Like, I don't know where it becomes fraud, but it's rough, man. Like people are going to get destroyed. So anyway, you just really want to know what you're up to, even when you're not looking to sell or there's no market. You need to know, am I going to put more of my own money into this company or not? And in that way, you kind of have to look at it like an investor yourself.
Yeah. And I think that's the part that's, the looking at it like an investor is so often not how people think about their equity, but it is the, majority of their, people would be like, oh, I have my, TD Ameritrade account and that's where, I do my investments. Like, but your largest on paper, net worth contributor is this, where you spend all your time all day, right? And like in this company that ultimately recruited you with a total comp number that included some sort of value associated with whatever, you were, the business you're joining. I'm super, I think, again, tools like Notice, I think help that be less sketchy because I think the total comp number is like really can border on misleading. Like in a lot of, and I don't know if it gets done on purpose a lot of the time, but like, having a blended total comp number that's like, this is your salary and then this is your equity. And like, you're not Microsoft. Like that isn't, that's not necessarily, like maybe that's what the last round priced it at, but what does, the market have to say about it or whatever. And, but I think that, and the other part that I'm really interested to see kind of how it plays out is where secondary trading or and I've thought about this before, where ultimately it's something that needs to get handled at the beginning of an employee relationship, where you need to have the right to sell. Like you need to have a lot of employees, right, also deal with not really being allowed to sell, where it's like, because the market wants less and you're about to go out for a round and like you can't be having these shares, like because in the public markets, right, everything kind of has a price. Like it's not worthless. It might not be worth $100 per share. The last round was, it was worth $50 a share. But then if you're a company that's going to try to anchor off of, to raise money, going to anchor off of your last round and kind of ignore some of the ugliness that happened in between, you don't want that person being allowed to go, post a trade that was, at, 50% discount to the round. And it's, I don't know it seems like generally it all, again, from the employee side. And I think this mostly gets handled on the big block trading stuff. I think it's, I guess, in the bigger names, like it's more liquid than I think the common person would think. Like it takes some work. It's not the public markets, but for big, known names like that are regularly traded, like you can get in and out of stuff if you really want to over the course of, if you with some focused effort. But it's on the employee side. That's like ultimately, I feel like the employee side of this is where the conversation's much uglier and where it's like much more needed. Like the education isn't just like a nice to have, like let's help, funds make better trades. It's more like let's help employees understand what they're getting into, like and what they're gonna like spend their lives working on. It's crazy.
Yeah, just everybody making the best decisions they can with all the available information and making sure that all the available information is sufficient to be able to make a decision. So
well, cool. I mean, I think that we covered a lot, and it's always exciting. It's always good to connect and to catch up on all this stuff. I'm super excited about Notice, the free Notice playbook. Cool. It's really awesome. I'm really gonna encourage people to check it out. I think anyone who's plays in private markets, like it's all, I mean, whatever you guys have a ton of different stuff going on. And I know that, not every startup, has a massive marketing department and stuff, but I'm sure you're starting to get the word.
We have no one in marketing. We have no one in marketing, no one in sales.
That's why I'm waiting for like someone this needs to get like talked about. Is you guys gonna ping fucking TechCrunch or something, or the information needs to at least I got like a hot tip.
We'll talk. We know some folks over there. We'll talk with them as well. But we want to talk to you first.
Good. First stop on the media tour. It's definitely something that needs. It's exciting.
Yeah, and I think that like you said it right. I mean, there's definitely company information out there, but we're really trying to also like do market level analysis. So total trade volumes and flows. We have a 50 company index, as you know. It's like the only real time weighted index for the private markets. Everything else is just kind of, I don't know why they even do it. It just doesn't really seem to make much sense. But so there's more stuff there to kind of just try and track the market as a whole. And I think that's also going to be helpful kind of from a macro perspective. If maybe your company isn't actively traded, you can say, well, but the private markets are kind of picking up, and maybe you can kind of get some secondary information there that can maybe be helpful if you're trying to make some decisions.
For sure. Well, we're coming up on time here. I really appreciate you jumping on, and it's always, again, like I said, it's always fun.
Thank you for listening to the Sandhill Markets podcast. If you enjoyed this discussion, make sure to click the link in the description to subscribe to our newsletter. You'll be kept up to date on venture news and our weekly live events where we host similar discussions with other amazing guests. You can also follow us on LinkedIn and Twitter, where we post regularly about upcoming events. Once again, thank you for listening, and talk soon.